Welcome back to the Deep Dive. Today, we're going to be taking a look at Macy's.
And
We've got some press releases and financial statements, and it's a bit of a story. It's not as straightforward as you might think, so we're going to be talking about department stores and holiday shopping sprees, and a twist you wouldn't expect, accounting irregularities.
yeah, what I think is really interesting about this one is it's not just about the numbers themselves. It's really a story about internal controls and responsibility and how even small discrepancies can have a big impact.
So let's set the scene. It's December 11th, 2024. You're scrolling through the news, and you see that Macy's has released their Q3 financials. But there's a twist. They've also issued this press release saying that an employee was intentionally misstating delivery expenses for a total of $151 million. That's a lot of undelivered packages.
It is, and it gets even more interesting because
Yeah.
this wasn't just like a one-time thing. This was going on for almost 3 years, from Q4 2021 to Q3 2024. Someone was deliberately
Yeah.
falsifying these entries to keep these expenses quiet.
Okay, wait. 3 years
Yeah.
of fudging the numbers. That's what was working overtime on the scheme. But here's what's really interesting to me. Despite the size of these misstatements, Macy's is claiming they were immaterial. What? $151 million is just chump change to them.
Well, not exactly. They argue that there are a few factors that make these misstatements less significant than they might appear. So first of all, the misstatements didn't impact their net sales. So that's the top line revenue coming in, that number that investors really care about. And they say that the errors also didn't disrupt any trends in their profitability or other key metrics. So basically, the story that their financials were telling remained consistent, even with these hidden expenses.
So they're saying that even with this employee kind of like cooking the books, it didn't really change how their financial performance was perceived. I don't know. Seems a little hard to believe.
Right, and that's why it's important to kind of dig deeper. So they also point out that this didn't affect their cash management, vendor payments, cash flow, or compliance with any of their debt covenants. So basically, they're saying the day-to-day business operations went on as usual.
So even though it's a large amount of money, they're saying it didn't really affect their key financial indicators. But if that's the case, then why even bother disclosing it?
That's a really good question. And this is where I think it gets even more intriguing. So while they maintain that the errors themselves were immaterial, Macy's acknowledges that they did have a material weakness in their internal control over financial reporting. So essentially, they're admitting that their systems and procedures weren't robust enough to prevent or detect this kind of manipulation.
Okay, so they're basically saying, look, this wasn't a big deal financially, but it shows there's a flaw in our system.
Exactly. Because if you have a security system in your house and there's a flaw in the system, maybe the alarm doesn't go off, someone's able to sneak in. But the fact that they could do that is a major problem. And in this case, the weakness was specifically related to how they handle manual journal entries for delivery and other non-merchandise expenses. So that's where the employee was able to find a loophole and exploit it.
So it wasn't just this rogue employee, but also the system itself being vulnerable. And allowing this to happen for so long, that's a little unnerving, especially for a company as established as Macy's.
Yeah.
So what are they doing to address this? Are they just like slapping a Band-Aid on it
Yeah.
and hoping it goes away?
Well, actually, they have outlined a remediation plan, which basically means they're taking steps to fix this problem. So they're reevaluating their risk assessment, especially when it comes to employees potentially circumventing controls. They're redesigning control activities to make them more robust. And they're also ensuring the data they're using is accurate and reliable.
So like a full system overhaul. Sounds like they're taking this pretty seriously. But this whole thing brings up a few questions, like if their internal controls were so weak, what else could they have missed? And how can investors trust their reporting going forward?
You're hitting on some really key points there. And actually, this situation led to another significant development. So Macy's Audit Committee, which is the group that oversees their financial reporting, they declared that management's previous reports on internal controls, specifically ones dating back to February 3rd, 2024, can no longer be relied upon.
Wow. That's a pretty big deal. It's basically like they're saying, we don't even trust our own past reports anymore.
Yeah, it does raise a lot of doubts and throws everything into question until they can rebuild that confidence in their internal controls.
It's going to be an uphill battle for sure. But amidst all of this accounting drama, Macy's is also trying to highlight some positive news from their Q3 report. Are they just trying to like distract us with shiny objects?
It's definitely interesting timing. They're emphasizing the positive momentum that they say they're building with their bold new chapter strategy, so their top performing stores, which they call the Macy's First 50, saw their third consecutive quarter of sales growth. So they've been investing heavily in these locations. Think, more staff, better merchandise displays, and just like trying to create a more exciting shopping experience.
Okay, so those are the stores that they're really putting all their chips on. But what about the rest of the stores? And what about their other brands like Bloomingdale's and Blue Mercury? Did they manage to stay afloat?
Bloomingdale's and Blue Mercury actually did report comparable sales growth as well, so that's a good sign. But there were some challenges as well.
Oh, I knew there had to be a catch.
So they noted sales declines in the Macy's locations that aren't part of that first 50, weakness in their digital size channels, and struggles in their cold weather category.
So it's a little bit of a mixed bag. They're top-performing stores, and the other brands are doing well. But the rest of the Macy's fleet seems to be lagging behind, and their online presence isn't as strong as they'd like it to be. But what about those cold weather sales? Do they just need to, pray for a blizzard?
Well, weather definitely plays a role, but it could also be a sign of changing consumer preferences, or maybe even some inventory issues. It's kind of like a retail mystery we need to unravel.
Intriguing. Well, before we dive into that mystery, let's take a quick break. And when we come back, we'll unpack how Macy's plans to tackle these challenges and what it all means for their future. Stay tuned. All right, so we're back and ready to unpack the rest of this Macy's saga. So before the break, we were talking about this mountain of good news and bad news. Strong performance in their top stores, but challenges with the rest of them. A weak digital presence, and those struggling cold weather categories. So how is Macy's planning to tackle all these challenges, while also dealing with this accounting mess? And what does it all mean for their future?
Well, one thing they've done is they've already made some adjustments to their annual outlook to kind of reflect those corrected delivery expenses. So they're projecting a slightly lower gross margin and also a lower adjusted EBITDA.
Hold on, EBITDA. For those of us who don't speak fluent finance, can you break that down for us?
Yeah, sure. So EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's basically a way to measure a company's operating profitability, but it excludes certain costs to give a clearer picture of their core business performance.
Okay, so they're basically saying, hey, even with these corrected expenses, our core business is still doing okay, but,
Yeah.
this whole accounting situation has to have shaken investor confidence. Like, if they can't accurately account for expenses in the past, how can investors trust their projections for the future? It's like trying to build a house on quicksand. It doesn't matter how nice the house looks if the foundation is unstable.
Yeah, you're absolutely right. This situation definitely raises questions about the reliability of their reporting and casts a shadow over those future projections. Will investors be willing to pour money into new initiatives if they have doubts about the accuracy of the numbers?
It's a valid concern. This could potentially hinder their ability to raise capital, invest in new stores, or even just maintain their current operations. It's a lot to overcome.
And it's not just about the financial implications, there's also the reputational damage. News of accounting irregularities can really erode consumer trust, especially in an industry like retail, where brand loyalty is so important.
So not only could investors shy away, but shoppers might also think twice before heading to Macy's for their next purchase. Ouch, that's a double whammy.
Exactly. Consumers might wonder about the integrity of the company and if this incident is a sign of broader ethical issues.
This whole situation, it's a reminder that financial statements, while they are essential, they only provide this limited snapshot of a company's operations and their financial health. They're based on a complex set of rules and judgments, and ultimately, they're only as good as the data that goes into them.
That is a crucial point. It's kind of like looking at a single puzzle piece and trying to figure out the whole picture. Financial statements can be manipulated, whether intentionally or unintentionally, and that's why it's so important to look beyond just the headlines and really analyze those underlying assumptions and policies.
It's like being a detective, searching for clues, piecing together the story, rather than just taking the numbers at face value.
Exactly. You have to be critical, skeptical, and constantly asking questions. That's what makes a smart investor.
That's why I love these deep dives. We're not just repeating information, we're really analyzing it, questioning it, and hopefully helping you become more informed.
Absolutely. That kind of critical thinking is so important, especially as we kind of delve further into the situation with Macy's. So bringing it back to their bold new chapter strategy, we know the first 50 stores are performing well, but how does this accounting issue impact their ability to execute on the rest of that plan?
That's the million-dollar question.
Yeah.
Will investors be as willing to back their initiatives, if they have doubts about their financial reporting.
Yeah, that's a huge factor. Trust is everything in finance. And this incident might make some investors hesitant, especially those who are already unsure about Macy's long-term prospects.
So it's not just about cleaning up their accounting practices. It's about rebuilding trust. But let's shift gears a bit and talk about those operational challenges that they highlighted in their Q3 report.
Yeah.
So declining sales in their non-first 50 locations, weak digital sales, and struggles in those cold weather categories. What's driving these challenges? Is it just Macy's? Or are there broader industry trends at play here?
Well, the retail landscape is super competitive these days. There are so many options. And department stores have faced some headwinds for a few years now as people choose to shop online or at specialty stores.
So it's not just about Macy's specifically. It's a systemic issue.
Exactly. It's an existential question. For department stores, how do they stay relevant in the age of Amazon and fast fashion? Especially a legacy retailer like Macy's. They have this huge network of physical stores and a really long history. They need to adapt, embrace new technology, and create these experiences that actually draw people into the stores.
And speaking of changing preferences, what about those declining sales? In the non-first 50 locations, why are those stores lagging behind?
Well, there are a few things that could be going on. It could be their location, the demographics in that area, or even just the level of competition they're facing. It's possible they haven't received the same level of investment as those first 50 stores. And it's showing in their performance.
So those stores are kind of being neglected.
It's a possibility. It could also be that they're located in areas where consumer spending is down or where there's a lot of competition.
It's like a game of retail chess.
Exactly. They need to constantly be analyzing and adjusting to stay ahead of the game. But let's not forget about their online presence. They mentioned some weakness in their digital sales, which is a big deal these days.
Yeah, it's not enough to just have a website anymore. What's the deal there? Are they just not keeping up with the times?
Well, e-commerce is a different ballgame. It requires a completely different set of skills and strategies.
So just having a website isn't enough.
No, you need a seamless user experience, competitive pricing, fast and reliable shipping, and a really strong marketing strategy to get people to your site and get them to actually buy something.
Sounds like a lot to juggle.
Yeah.
And they're going up against giants like Amazon.
It's David and Goliath. And it's not just Amazon. There are so many smaller online retailers all vying for attention. Macy's needs to stand out, offer something unique, and create an online experience that resonates with shoppers.
Okay, so let's move on to those struggling cold weather categories. They mentioned that as a contributing factor to their sales performance. So is it just bad weather? Or is there more to it?
Well, weather definitely has an impact on retail sales, especially for seasonal items. If it's warmer than usual, people aren't going to be buying winter coats.
Makes sense, but there could be more to it than that, right?
Absolutely. It could be a sign that consumer preferences are changing. Maybe people are buying lighter weight jackets or just buying fewer cold weather clothes.
So it's kind of a mix. External factors like weather and internal factors like consumer demand and inventory management.
Exactly. It's this complex interplay of variables that retailers have to constantly analyze.
So what does all this mean for Macy's future? Are they on the verge of collapse? Or can they turn things around?
That's the big question.
Yeah.
They're at a crossroads, facing all these pressures. Their first 50 strategy shows that they are capable of adapting. But this accounting issue raises doubts about their reporting, and it could impact their ability to move forward.
It's a tug of war.
Exactly, and the outcome is going to depend on how they handle all these challenges.
It's a high-stakes game.
It is. But hopefully this deep dive has given you some insights to help you understand the situation.
It has.
And now it's up to you
To form your own conclusions.
But before you do that, you have some final thoughts. And a question to leave you with.
Okay, so we're back. Ready to wrap up our deep dive into Macy's. We've seen the accounting issues, operational challenges, and all the big trends impacting retail right now. It's been a wild ride. So as we kind of put a bow on this whole thing, what are the key takeaways here? What do people need to remember as they're shopping and investing?
I think this whole situation really underscores something important. Even these big established companies, they're not immune to these kinds of issues.
Wow.
Accounting problems, internal control weaknesses. It can happen anywhere. So it's really important to be aware of that. It's kind of like you wouldn't buy a house without getting a good inspection first. You want to make sure the foundation is solid and there aren't any hidden problems. Same thing applies when you're looking at a company. Don't just take the numbers at face value.
So what can we do? Do we need to become like forensic accountants?
I don't think you have to go that far. But it is important to be informed, be critical, look beyond those headlines, ask questions, and just keep an eye out for any red flags.
Okay,
Oh,
makes
but
sense. But what about those operational challenges that Macy's is facing? What should we be watching for?
their bold new chapter strategy is definitely something to keep an eye on. Those first 50 stores are doing well. But can they replicate that success elsewhere? Is this a sustainable long-term solution, or are they just kind of putting a Band-Aid on things? And how will this whole accounting issue impact their ability to actually carry out that strategy?
And then there's their digital strategy. Can they compete online?
Right. It's like they're running two races at once, trying to revitalize those physical stores while also building this strong online presence.
That's a lot to handle. So any final thoughts?
Just stay curious. Keep asking questions. Be an active participant in your financial journey.
I love that. Knowledge is power.
It is.
Well, that brings us to the end of our deep dive into Macy's. Hopefully you learned a few things, not just about Macy's, but about the whole retail world and how to be a more informed consumer and investor.
So as you head out into the world, armed with all these insights, we want to leave you with a question. How much does the company's handling of these kinds of issues, like we saw with Macy's, influence your trust in them? Think about that. Thanks for joining us on The Deep Dive.